especially if they're going to miss the jobs by 1 million every year. So we'll just have to see what that plays out like. But the takeaway was they are going to initiate cuts, and they are going to continue to analyze for further cuts on a month-to-month basis.
Hi, everybody. Welcome back once again to the Comstock channel. I'm Marlin Bohling with you. Always a treat to visit with you. And I want to encourage you, just a reminder, make sure you like these videos, subscribe to the videos by clicking on the bell icon down below, and share these videos with others as well. Well, I also want to remind you to be sure and check out our special premium offering that we have. My gosh, you can get some expert analysis of the markets and detailed market talk and maybe some other things included in there with our morning update. And you can get that for 1 month for a single dollar. Just $1 will get you a free trial for a month. And you can't go wrong with that, especially as we're approaching harvest time. Well, I want to welcome aboard Eric Relph of Comstock Investments, and Eric is heavily involved with some of those comments that come out in the mornings. He even does his own version of a morning video, so anybody in their premium section, they can see you every day. So what did you make of the way we closed here on Friday, Eric?
A little bit mixed. I think corn was weighed down by the trade action in the wheat. The wheat has just been following around Paris milling wheat like a lost puppy dog all week. It's been kind of incredible, honestly. Other than that, soybeans, a little corrective action to finish after being down 20 cents yesterday. We're up 11 today. I had made the comment that we really needed to see a nice day in the beans today. Otherwise, that chart was not going to look good. Luckily, we got that. The corn still flirting too close to 390 in the December contract for comfort, but that's where we're at. Hopefully we can hold that level, toe the line a little bit, and see some correction higher off of this. But right now, there's just not a lot to excite the market. So a little bit of a mixed bag there. Cattle were a little chaotic this week after we saw the slump on Friday following the initial comments from Kamala Harris. Then we saw massive trading ranges, cash cattle plummeting throughout the week, and that didn't bode well. You know, futures ignites it, the cash follows through to the downside, then the futures trade lower as a result because everybody wants to get hedged up. And so it's just a snowball effect once that starts happening, and that's kind of what went on this week. So I'd really like to see that cash stabilize in the Friday trade. Maybe some of them that held out will pay dividends by the time it's all said and done, but we haven't seen any reporting in numbers today. And hogs traded a nice week. Honestly, you had June up a couple bucks for the week. October was up $5 for the week. So really some nice looking trade there from a technical standpoint, but we're not getting the follow through in the cash that would substantiate that. So I'm a little mixed there, but looks good right now. If we could just keep it going, that would be some nice momentum. Export sales were excellent this week in grains, not so much in proteins. The pork exports were actually pretty pitiful. When you've got pork at almost the same level as beef, that's a bad week, and that's what we had this week. And but the grains, it was pretty phenomenal. Your weekly export sales were 1.3 million on corn and 1.7 million on beans, another 500,000 on wheat, and that's just on the weekly reportings. Then we had daily export sales every day this week. Literally all 5 days this week, we had some daily flash sale of over 100,000 tons of something. A lot of it was soybeans, but yesterday was pretty exceptional. You had China, Mexico, Vietnam, and unknown destinations buying not only beans, but also corn and meal. So a lot of value shopping going on, and U.S. is the game right now.
You take a step back and look at it, and we still have some catching up to do anyway, right?
A lot. Our new crop export sales are just abysmal right now, and we need to see the movement. And that's the problem is we can look back, we can see all these sales coming across and say, oh, well, that's nice. That should help the market. And it probably should to an extent. But when you're so far behind, you need to see big numbers. You know, we need to be moving 3 million tons of corn and 4 million tons of beans in a single week between the dailies and the weeklies. And we're just not seeing those kind of numbers yet. And I think a lot of that is, again, indicative of China's overall economy.
Seems like the weak sister over the past week would have been the wheat trade. What's going on over there anyway?
New contract lows, all three classes, virtually every contract. It's ugly. KC made another new low today. Chicago did not by 2 cents, I believe it was. So, not good looking stuff there. And again, it's following that Paris milling wheat. The Paris milling wheat trades directly off of what's going on in the global cash market. Because of their location, they're having to compete with Black Sea. Russia continues to offer discounted wheat to the global cash market. Paris goes down to try to catch some business, and then the U.S. just follows the Paris lower. It's just EU wheat, Black Sea wheat. It's all just plaguing our markets. And we're starting to get a harvest of spring wheat. So spring wheat took it on the chin this week too.
So what would you be watching for a sign that maybe it finally makes a bottom?
I actually had a conversation about 2 hours ago regarding that. And the question was, I've ridden this thing down so far and I've been long and wrong. And what should I do? And I said, well, he said, should I just get out of the damn thing? And I said, well, you're at a crossroads here. If December Chicago wheat does not make a new low and close at a new low, then there's still a little glimmer of hope. But that's about all you've got to cling to right now. So I'm really keying off that December Chicago contract from a technical standpoint. As long as we can toe the line there, there's still some hope.
What about on corn?
Corn 390 December. It's hard line right there. If that breaks down, then I think we open up the technical selling to 360, something along those lines. And there's 10 different ways to cut up a chart and come up with whatever number you want to come up with. But the reality is there's a few different indicators that would say if we break down 390 on a closing basis, particularly on a weekly close, then we would open the door to that 360 mark in December.
So we're getting pretty close to the start of planting season already in South America, aren't we?
Getting close, yeah. And La Nina cycle coming in, that always bodes well for Mato Grosso. Not so good for southern Brazil and Argentina, but that's, some of the give and take that they deal with on an annual basis down there. But if the heart of the growing regions, and that is central and northern Brazil, if they're in good shape, they're gonna produce. But we're hearing different rhetoric, I guess is how I would say it. Economically, the corn doesn't work, and they don't have the same type of banking system we do. They don't have the financial backing to sustain through the bad years to get to the next good year, and the things, some of the tools that U.S. producers have. And so when the corn doesn't work, they just won't plant. The bean acres will probably be similar to what we've seen this past year. So we're not looking for a big adjustment on the bean acres, but there may be a lower revision on the corn acres, and some of that ground may go unplanted just because of the economics of it. And their domestic consumption is supposed to increase exponentially due to added corn ethanol plants. And if that's the case, then we could see some of that global demand shift over to the U.S. side.
Well, of course, we had the word that came out, I guess that was Thursday, that the Labor Department says, we kind of overshot the jobs numbers over the past year by about 1 million jobs. Oopsie.
Yeah.
So anyway, that came out. And yet here on Friday, we had the Dow up. Last time I checked, it was up like 300 or 400 points or so. Big optimism there. Now the dollar sold way off of its earlier highs of the day on Friday. What's going on Friday?
So Jerome Powell spoke. We actually thought he was going to speak at his normal time slot, which is 1 p.m, but he's out in Jackson Hole for the symposium, and he spoke this morning. And his I guess the line that caught everyone's attention was, it's time for policy change. And I'm not quoting there, but that's the basics of it. It's time for policy change. And so the takeaway was, we're going to start rate cuts as necessary. The big thing is employment. We need to keep an eye on that. But, of course, he didn't give any guidance as to we're going to cut it this many points over the next 2 years or anything like that. They can't be that transparent because they don't know what it's going to look like a month from now, especially if they're going to miss the jobs by 1 million every year. So we'll just have to see what that plays out like. But the takeaway was they are going to initiate cuts, and they are going to continue to analyze for further cuts on a month-to-month basis, or a meeting-to-meeting basis, I guess is kind of how they operate. So you saw the stock market soar, metals flying high, and the dollar took it on the chin and got actually pretty close to par today for the first time in a long time.
So you think back, what's it been, 2-3 weeks ago, when they had the big sell-off in the equity markets, and that pulled the cattle market down with it.
Mm-hmm.
But then the equities rebounded, and now we're up near highs again, and the cattle market never did really regain its composure. And it came off of its highs again on Friday. What's going on in the cattle market then?
Well, I think the trade that we saw in the last day and a half or two was just kind of position squaring for the cattle on feed report that came out just minutes ago. And aside from that, it's been the talk of price fixing, but correcting the price gouging problem that we've had at both the wholesale and retail levels, particularly in the food sector. They isolate proteins as one of their talking points. It almost becomes a buzzword that affordable beef is going to be made available to all Americans. And so that kind of talk, the market just did not like it. It just corrected hard in a very short amount of time after we had already sustained the correction that we saw from the break in the equities. So you've got the really hard break from the equity break, and then you've got a hard break from the political gossip, which will likely never come to fruition and not be anything by the end of the day. But nevertheless, they're trading it on the idea that if this happens, what does that mean for a capitalist market?
So in essence, kind of a modern version of a chicken for every pot, I guess, a roast for every pot or something.
Yeah.
I don't know where that goes from here, but it seemed to ruffle quite a few feathers, didn't it, when those comments came out?
Yeah, absolutely. Yeah. And that industry is riddled with people who don't want to hear about anybody dipping their finger in the wrong cookie jar. Stay away, stay on your side of the line. I'll hand you the cookie when I'm getting ready. And if you want to try to reach across, you better be wearing a steel jacket.
All right, duly noted. I will never grab for your cookie. All right. Well, thanks for analyzing this week's trade. It's been kind of a rocky ride, but anyway, just kind of ended on a bit of a weak note on everything except for the Dow. So we'll have to see what happens next week. But I hope you have a good weekend. Thanks for enlightening us here, Eric. Always great to visit with you. And again, I'll remind everybody, check out your morning comments. You can get access to that premium content for just $1 for the first month. All right. Well, that'll do it for this episode. Thanks again for joining us. For producer Brian Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.